Welcome back. You're watching IndianOpen right here on BloombergQuint Live. So we've got signs of green shoots, at least in the morning, with the SGX Nifty trading higher by about 0.5%. 12,098 is what we've scaled, and that's also on the back of some positivity coming out from China. We've got Shanghai Index, which is up about more than 0.5%, with Hong Kong also trading higher by 1.5%. Japan trades slightly soft, but that's okay because it's been a slight bit of an outperformer over these last few days. Good morning, Neeraj.
Good morning. Difficult to say, Devina, what will happen in the near term, but we take it we play it by the day. For today morning, it's in the green, and let's welcome that from a bull's perspective at least.
I mean, the start is definitely positive. Let's see what the rest of the day throws up in terms of the overall market mood and sentiment. Remember, stiff supply that's been coming in on every bounce that we've seen. It had been a slightly bigger and extended rally that we saw last week, so profit taking most warranted. But let's see whether or not we've got that strength and that ammunition to take us back to rescale those record highs that we created a few weeks ago, because that's the big supply and resistance zone that keeps coming up time and again. 12,300 is the first one to scale, though. Let's also take a look at what's been happening in the derivative space. Navneet joins us to highlight the same for us. I mean, good afternoon. Good morning.
Good morning to both of you. Well, it was second straight day of losses coming in for the frontline indices, both Nifty and Bank Nifty. And there were some key levels which were breached intraday, at least for Nifty. It did breach the mark of 12,000, but I guess the bulls managed to defend that mark. And by the way, Nifty has been trading below its 20 and 50-day moving average. No major build-up came in for Nifty futures, but one key takeaway was that the futures were trading at a discount for last 8 sessions, so they turned into premium of about 8 to 9 rupees. What's the level then to watch out going ahead? I think if we were to correct further, 100 DMA will be in focus, which is somewhere about 11,890, and on the upside street we'll be first watching out for the 50 DMA. So 12,150 something you should watch out on the upside. For Nifty Bank pull up, that one as well, I think that also breached the level of 31,000 yesterday, but it closed above that mark. There was some unwinding of position coming by. You had the open interest falling by about 3%. While the markets were weak, you had volatility inching higher, so India Wix gained about 3.5%. It's still not at elevated levels. 14.2 I guess should be comfortable for the bulls as well. Across the board, the PCR fell on account of more of call writing which came into the system. So you had the Nifty PCR at 1.32 versus 1.39 of previous session. In terms of OI distribution now for this Thursday expiry, which is scheduled on February 13, maximum open interest on the call side is at the 12,100, while on the put side it is at the 12,000 mark. So the range, I guess, will remain 12,000 to 12,200 moving ahead. Very quickly then on the stock futures side, by the way, this is yesterday's action, so you did see call riding at 12,100 strike, while the put writers of 12,100 did run for cover. The major takeaway was there was additional riding on the 12,000 put, so there was no unwinding from the put writer side, and yet we saw bulls defending that mark. Moving on to the stock futures then, there were a lot of stocks where fresh short positions came by. So you had Bharat Forge reacting negatively to the numbers. The stock was down 3.5%. Tata Steel fell by 6%. Short positions were seen there as well. And M&M too fell by about nearly 7%. You did see fresh shorting coming by, while long unwinding came in for something like ACC, which came out with the numbers. Very quickly then, the FI data, I think short positions continued even on index futures. They added 2,800 contracts, unwinding of about 1,500 on the long side. While if you look at the index options data, I think that remains pretty much skewed. There was hedging in the form of put long. They added about 16,000 contracts, but bullish bet also came in the form of put short, where nearly 4,400 contracts were added. With that, it's back to you guys.
Thanks a lot for that, Navneet. Dharmesh Kant, Head of Retail Research at IndiaNivesh Securities, is joining us on the show right now. Dharmesh, good morning. Let's talk about what you're advising clients right now. While we're talking about the mood of the markets, becoming slightly difficult to gauge the direction and the structure. So far, much of it has been digested. You are seeing that pick up, but it looks like the headwinds around 12,300 for the index seem to be kicking in more often. Do you feel that right now is probably a period where there could be further corrections from these levels?
Yeah, good morning, Devina. I think the market is, going to consolidate in a sideways kind of environment as far as headline indices are concerned. And the good part and the best part has been kudos to the Chinese, management and the government, because they have contained this entire virus epidemic into the China itself. It has not gone outside the borders, and all hats off to them for managing it in such a diligent and serious way. And I think this entails an opportunity for stock market investors and the equity investors to do the cherry picking when this consolidation is on. And that is precisely what we are advising our clients. So every decline in the market, we are using it as a buying opportunity. I don't see this market collapsing from here. Initially, when the outbreak was there, the views were different. But as it has progressed and how the things are happening, we do feel that this is a buying opportunity, and cyclicals are the space where we are focusing on. Primarily public sector banks, which have corrected again post their earnings announcement, and it gives you an opportunity to dabble out there and do some cherry picking. So Canara Bank, Bank of Baroda and SBI remains a hot and topic out there. At the same time, automobiles are looking attractive. Maruti is looking very attractive at current level, 6,800 kind of stock price looks pretty attractive, because see, Maruti is the only automobile manufacturer in the four-wheeler passenger segment space where for Q3 they have given a volume growth. So in a decelerating environment, they came out with a volume growth, followed it with a month of January again where there was a volume growth, and they are always coming out with new models which becomes a hit in the market. So that looks very attractive. On the two-wheeler space, Hero MotoCorp, again an entry segment vehicle manufacturer, looks very attractive with Rabi crop season. All estimates are that it will do a good crop season, and food inflation is high, which adds per capita income in the hands of people. Worldwide, we do think because of the halt in this economy, businesses will add to the consumer surplus in the hands of the consumers, the buyers. So corporate may take a profitability hit for the timing, but consumers will gain through this halt, and their savings will increase, which they will again do for buying activities. So to sum it up, it's a market where you have to buy the corrections and sit on your conviction.
What about companies which are not correcting, Dharmesh? Any thoughts on the likes of Avenue Supermarts or Trent, these two in particular?
Yeah, leaders, the valuations are beyond imagination. The type of price traction we have seen in Avenue Supermarts, and there's no justification as of now. Excel sheet you can always keep on 40%, 50% kind of a growth you can build in, but still again, if you look at the valuation, it goes far beyond. And the problem, I'm saying this as a problem, is because you have very few choices in the market to pick from, where you have a steady cash flow and a rising cash flow. So Avenue Supermart, all said and done, has been giving out numbers where the cash flow has been rising well. In the other industry segment, it's not there. So there are ifs and buts in other segment, but these two businesses, Avenue Supermarts is the leader out there. Trent is just a rub-off effect of what Avenue Supermarts has been doing. So people are getting interested in that, and but I do feel that it's not a time for new investors or buyer to get into it. However, if you have been holding it, continue holding it. I don't see a price correction happening. At best, what can happen is a sideways kind of a consolidation coming in, where for next 6 months you don't see more than a 5% upside from the current levels of these stocks. Personally, I am not advising clients to enter into this space at all. However, this Aditya Birla Fashions Retail, which again, it was a loss-making company, but I think as a turnaround has happened out there, and FY21 onwards, the profitability come in thick and fast. So the institutional sale, the impact which was there because of Aero shirts not getting sold, so that they have overcome, and they have hyped off the franchises which are not profitable. So operating level, the company has turned around. So that looks attractive to me at current valuations. So it may be a doubler in next 2 or 3 years time frame. So I would be buying Aditya Birla Fashions rather than a Trent or an Avenue Supermarts.
All right, Aditya Birla Fashion, that's Dharmesh's pick. Dharmesh, stay with us, lots more to talk to you about, but also important to discuss some earnings that came up post-market hours yesterday, and then the big one on the index today, that's Coal India. What is that going to push out in terms of numbers? Nikki joins us for that. But I'll talk to Darshan first in terms some of the other results that came out post-market.
Yeah, so one of the stocks that came out with numbers was Chalet Hotels. Decent set of numbers, revenues up 12%, profit was up almost 2.3 times. Now margins came in lower at 40.4%. 50% versus 46%, and that was on account of rollback of some recognition in rentals as well as lumpy cost type items that impacted the margins. Now the hospitality segment revenues was up 7%, but it was the rental and commercial assets that did extremely well, which was up almost 2.2 times. Now overall superior RevPAR that was there at 10%, which is extremely strong. Cost control is something that was positive, so that is something other key positive. On the negative side, hotel EBITDA margin was slightly lower than what was anticipated, and delays in rental segment are the negatives. Phoenix Mill results above estimates, revenues up 16%, EBITDA up 16%, profit up almost 30%. Overall, the lower electricity expenses and lower construction cost aided the bottom line. Hospitality revenues up 11%, retail revenues up 11%. Mainly the residential segment contributed significantly. Nalco, very weak set of numbers, revenues down 23%, EBITDA down 93%. There was a net loss of 34 crores versus a profit of 300 crores. Mainly chemical segment was down, the aluminium segment was down. Now basically volume growth in both aluminium and alumina, both of them were weak, but realizations pretty much was in line with what the analysts were anticipating. One of the key reasons why the margins came down was the power cost, which the company outsourced from some other places, power generators, for 40 days. Now the management has said that it will stop repurchasing power from the other unit, and it is in process to restart some of the aluminium pots. And finally, Petro and LNG results were in line with estimates. Revenues down 5%, EBITDA down 5%, profit was down 40%, and that was on account of deferred tax that they paid in the base quarter. So on the back of that, it was elevated. Volumes down 7%, which is much lower than what the historically seasonality factor is indicating. The hedge did well. Kochi also did well this time around. And finally, Bajaj Consumer revenues down 8%, profit down 18%, EBITDA down 25%. So weak set of numbers there.
All right, yeah, Darshan, thanks very much for that. Let's talk about Coal India, Nikki.
Yeah, weak set of numbers that are expected from Coal India as well. 8.5% downtick when it comes to the top line performance, and a 26% dip on the operational front. You expect the margins also to contract to 21% as compared to 27% in the corresponding quarter, and profitability, that is also expected to take a hit as much as 5% year-on-year basis. What essentially goes behind the making of the numbers would be the weak thermal demand and extended monsoons, which in turn have weighed on the volume performance, or rather dispatches of the company, which is expected to be lower by as much as 8%. Also, we are expected to see a decline in realization, which essentially will be driven by e-auction prices that have come down by as much as 10% year-on-year basis. We expect stable set of FSA realization in this quarter, and things that we like to watch out would be the dividend declaration policy and the commentary of whether or not the company would be able to meet the production goals it has set out for FY20 and the long-term goals for FY24 for that matter.
All right, guys, thanks very much for that. So keep in mind all of those names as we begin trade this morning. Dharmesh, a quick word from you. What are you expecting out of Coal India?
See, Coal India, I mean, the productions and everything is there, and the numbers are there, so we are expecting around 10% kind of degrowth in the profit. But the point is that in spite of aggressive positions given by Coal India about the production and how they want to go cross 1 billion mark, billion tons by 2024, but the moot point is shift to renewable energy is the focus area of the government, and as the year passes by, it will be more of a renewable energy than thermal power production. So thermal power production is already it will take a backseat, and that realization of Coal India will not improve. Having said that, the stock price is very, I mean, if you are just holding it and going by the dividend it will pay, then also you will make decent returns if you are holding it for 3 to 5 years, because at current stock price the dividend yield itself will be more than 10%. So risk reward ratio sits in favor of it, but how much money one can make by investing in Coal India is questionable given the scenario in which entire power generation shift is happening. So there the caveat is on.
Okay. Let's also bring in our technical experts on the show then. Kunal, Rambhia, founder and fund manager at The Streets, is joining us right now on the show. Kunal, thanks very much for taking out the time. Let's talk about your index opinion. What's the trade on the index that's likely?
Yeah, hi, morning, Devina. What we saw was overall the distribution pattern on the Nifty and the Bank Nifty near to the beginning of February, and there was a decisive fall on Bank Nifty, at least from 12,050, and it made a low of around 11,600 kind of zone. From there, decisive bounce, and yesterday's close was again 12,030. So in technical terms, we call it as a retesting of the breakdown zone. Now, when this retesting has already happened and we saw 2 to 3 days of lackluster movement, today global markets are a bit positive, and so we need to keep both the sides open now. So on the index front, if I talk about Nifty, then I think about 12,000 decisive closing will take us to 12,400 again kind of zone, keeping the stop loss of, in that case, say around 11,900. And on the lower side, if at all, we fall below 12,000, which seems very likely because of the distribution pattern. So below 12,000, I think we are heading for 11,800. But as of now, no man's zone, consolidation on cards. So 12,100 on the higher side, and say on the lower side, 12,000 levels to keep in mind. And as far as Bank Nifty is concerned, so again, there are two levels. One is 31,400 on the higher side and 30,900 on the lower side. So below 30,900, say the doors are open for 700 points more fall. And about 31,400, I think the targets are 32,400, 33,000 kind of.
Okay, so what are the stocks then you're watching out for, Kunal? If indeed, while it's consolidation, but there's a bit of a downward bias, what stocks do you trade? Give us a couple of ideas.
Hi Neeraj, morning. So first stock which is on the long side is going to be TVS Motor. So if I look at the overall structure of the TVS Motor right from November till now, the stock is in consolidation zone of around 490 to 450. Yesterday's closing is 456. So here the risk reward is extremely favorable for the longs. So keeping the stop of 450, one can think of going long. That's 6 point stop loss, and on the higher side, we expect the targets of 475 to 490. The second stock is Maruti. We talked about Maruti right after the results also. The stock is decisively down. But because if the market turns out to be bullish, we may get a chance to short even little higher. So think of selling near, say, 69.75, keeping the stop loss of 7,050. I expect the targets of 6,500, which remains open. And definitely, I'll be trading indices the way we discussed.
Okay. Well, watch out for some of those stocks and those ideas there. The key movers, of course, of yesterday's session were, as we mentioned, the likes of retail, as well as some of the specialty chemical companies. We had Bodil Chemicals, Neogen Chemicals, Alkalamines, small, large, medium, everything did very well for themselves. Kunal, one stock is Fine Organics. I don't know if you track that one, but if you do, how do the charts look here?
Yeah, Neeraj. So, we discussed about Fine Organic last week also. Yesterday, if I'm not mistaken, it's the stock which came out with the result yesterday also, right? So, are you talking about Cameron Fine or Fine Organic?
The price at 2474.
Perfect. Okay, so that's near to all-time high, clearly making higher top, higher bottom formation. The stock right from 1800 is clearly into uptrend. So, this is a stock which can be accumulated on every decline. So, if someone is getting an opportunity to buy, say, near 2350 to 2375, keep a hold on the counter. There is no negativeness on any time frame as of. Very strong.
All right. Brijesh Singh, Senior Technical Analyst at StockAxis, is also joining us on the show. Brijesh, a quick call on the indices.
Good morning, Devina. Seb, Nifty looks now, after the session of consolidation is over and a little bit pullback would be there. So overall trend for the Nifty, or I would be saying the range for the Nifty is 11,900 or 11,850 on the downside, followed by 12,200 on the higher side. But the hourly chart indicates for the probability of the pullback. So if someone wants to play on a long side, taking a Nifty spot value of 12,030, one can take a long position with the stop loss of 11,980 and play for the target of 12,140 in a couple of days. Even if I check it out, the Bank Nifty has been concerned now 30,900 was been holding on from past couple of days and it has not been broken. So if someone wants to go for a long side, keeping 30,900 as a stop loss present, it can be used to go long for the target of 31,300. Again, on the higher side, 31,450 would be acting as a resistance. That is the second level which if Nifty crosses this 31,300, the next level to watch will be 31,450.
Okay. And what about stocks then, Brijesh?
Two calls are there, both on the long side. Time frame would be 2 to 4 days. The first call is a gale. The daily charts indicate the trend line breakout and the high lows formations for the upside. So 122 around the stock got closed. Presently, it can be used to go long with the stop loss of 116 for the target of 130. And second is Cadila Healthcare. On the daily chart, the stock has been trading with the higher top and higher bottom formation. The previous swing high has been broken, so somewhere around 278 the stock got closed. Present rate or any dip till 275, one can take a long position in it with the strict stop loss of 268, play for the target of 290.
Okay, got that. On a special segment then, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, good morning. It looks like specialty chemicals is just ruling the roost this morning.
Yeah, actually, Devina, good morning to you as well. So chemicals seem to be the pack, the theme of the day today. And Deepak Nitrite is one stock where the fear and greed indicator is suggesting that we could see this trend continuing moving forward as well. And this seems to be a good entry price because the fear and greed indicator, that has given a positive signal. As we always do, let's first try and understand what this indicator is and how do you interpret it. It is basically a spread of the two. It is basically a spread of the two weighted moving averages of the true range, and it oscillates on a zero basis line. So anytime that the value turns in positive, we'll see that the fear and greed indicator changes its color from red to green, and when it goes into the negative, it changes the color from green to red. In the case of Deepak Nitrite, we saw there were a few days of underperformance when the stock did come off after a big move on the upside. But then that move has also been subsided, and the last 2 days have been extremely positive. In fact, yesterday, although it closed only about 1.8 or 2% higher compared to most of the other names which saw a much higher rally, the volumes too have seen a huge pickup. It came on the back of almost 1.8 to 2 times the average 30-day volumes as well. And the fear and greed indicator, after a series of negative red bars, has given a positive signal as well. On that weekly time frame, we're seeing that the stock is continuing to make the higher top, higher bottom formation, and the trend continues to remain intact. So at this current price, the fear and greed indicator suggests that it is a good entry level and one could look to go long.
Okay. How well has this worked in the past for Deepak Nitrite?
So Devina, 4 out of the last 6 times, and this being the 6th one, every time we've seen a positive signal being generated on the daily time frame, the monthly return on a closing basis have been closer to around 8%.
All right, that's great. Yash, thanks very much for that. In fact, since we're on the topic of Deepak Nitrite and the specialty chemical companies, Dharmesh, your word on some of these names, considering the China situation as well?
Yeah, but I think it is because of the China situation, most of these names are finding traction as far as stock prices are concerned. But this is going to be a short-lived kind of a traction. It's just a trading blip which is there, because when the situation normalizes in China, the supply will be back and the production in China will be back to where it halted. So it's just a trade which people may take, and the trade is still on. I don't think it getting terminated so soon. So one can take their pick, particularly except anything organics, I don't have a buy pick on any one of them.
The other bit is the commentaries that these various managements have given on various forms of media and on calls that they have organized when they've been asked about the impact of coronavirus. I mentioned this in the trade setup. Blue Star, for example, said that if this tends to be a short-term phenomenon, the coronavirus impact could not be an issue, and as of now, Q4 is not going to be impacted. Dixon Technologies said that all supplies from China are covered until the end of March 2020 for production, so for them as well, this doesn't get impacted. Amber mentioned that final component may be affected if the shutdown extends, but for now, Q4, that may not be an issue. Similarly, companies like Voltas, etc., have all mentioned this. So even for consumer durables, which is the other pocket wherein there is some anticipation of raw material shortage, etc., Q4 doesn't seem to be one big impact. So for specialty chemicals, is on the positive side. For the air conditioner or electronic manufacturers, there is no negative, which is arguably considered to be a good thing, so keep that at the back of your mind. Okay, let's talk about some results. I heard you mention that you're looking at cyclicals, Dharmesh. I want to talk about particular set of cyclicals and which metals and the names which have come out with results. Nalco, do you track this fundamentally, because the numbers just seem very, very disappointing?
Sorry, Neeraj, I don't track Nalco, as a company, but as far as metal companies are concerned, the results have been disappointing. Even Tata Steel numbers were not good. Even on the domestic market side, there was a disappointment when the numbers were played out. So I think Q4 is where you will see more of a traction coming in as far as numbers are concerned. But again, the type of fiscal situation is which the government is tied up. This all hope about cyclical recovery in metals may not play out in the domestic market. International is already a tough scenario out there. So it's a avoid, the space isn't as I avoid as of now.
Okay. The other one which came out with numbers, two names came out with results. I don't know which one you track, so I'm asking you both. One is Phoenix Mills, when the results were above estimates and the residential segment revenue went up 2.4 times. The other one is Chalet Hotels, wherein net profit itself expanded 2.3 times. Do you track either of these two fundamentally?
Yeah, Phoenix I do track, and they have a very good mix of annuity income as far as rentals are concerned, and the property income. So that is a steady state kind of a business which they are on. And one again, the valuation, I am not very comfortable with the valuation at which the stock price is trading. But in the present environment, it's a good buy. On the hotel business front, I think it's all, be it Chalet Hotel or the others which are there in the business, it would be a short-lived kind of business, because eventually the margins are going to come down, and that will hit the profitability, and the valuation at which Chalet Hotel is trading is again very expensive. So that's a word for me.
Z was down 7, almost 8% yesterday. Brijesh, what would you do with Z?
See, if I talk about Z till it's been trading below the level of 265 or say 270, any rise should be used to short in it. Yesterday closing was somewhere around 230. It indicates probability of more going down. So somewhere around 242, one can keep a stop loss. That is a resistance zone right now for a short-term trading bet has been concerned. And look for the target of 215 or even 205.
Okay. So that's a short call coming in on Z.
Devina. I mean, forget that price. I mean, whether it reaches there or no, but the last previous price movement certainly shows that while there might be perceived value here, there is something that is bothering the markets, be it, I mean, the whole issue that they are involved in and the possible outcome thereof, or just the certainty of earnings, or maybe a combination of both.
Yep. That's probably the biggest worry that the market has for Z. The other thing is M&M. In yesterday's session, the stock fell about 7.5% too. Kunal, Rambhia, a big drop in M&M to 528. Does that also warrant a short?
So, Devina, if you look at the overall structure on the weekly chart, that's right from September till now, the stock was in broad consolidation of 575 to 525. That was a broader zone. So yesterday's decisive fall post results, yes, definitely that's worrisome. I think this consolidation, if at all, is taken out on the lower side. Say 510 is taken out on the lower side. I think we are heading for 425, 450 kind of mark. But the structure is definitely not encouraging. Weekly charts right from mid of 2019 a week itself. So, rather than bottom fishing the counter, we'll stay on a side. If someone wants to short below 510, one can think of shorting the counter.
Okay, I think the more encouraging part was Reliance Industries maintaining itself in the green in yesterday's trade. 1435 is where it shut shop yesterday. Marginal gains contributed about 6 odd points to the total tally of points in the index, but let's see what this one does, because it's been constantly under pressure on quite a number of occasions. So 1435 for Reliance Industries. 38 seconds left to go for market pre-open. We're going to focus on what the SGX Nifty is suggesting. So up about 0.5%, 62 points gain for the SGX Nifty at 12,103. So can expect an initial pop. Remember, yesterday everything fell. You had Tata Steel also, which fell up more than 6%. Eicher Motors about 3.5% under. Tata Motors fell. Coal India itself was down about 3% today. Coal India reports numbers. So you're going to be watching out for all of these as we set up for trade this morning. And also currency, the bond market yield somewhere around 6.44. That's where it shut shop yesterday. For the rupee, we were at about 71.29. Watch out for all of those factors too. Nifty opens flat, slight negative bias there, with the Sensex gaining. Sensex is also absolutely flat actually. Individual counters is something that you need to watch out for. We'll start off with the losers first. And first movements on HDFC Bank, first price take suggests a 3% cut on the stock. IOC is the other one, 2.5% under. Vedanta, Wipro, BPCL are some of the other losers. But the list of losers is, far and few, not too many in terms of losers. I think just about 4 stocks now that have opened pre-open in the red. Amongst the gainers, you've got Power Grid, which is showing you a 5% pop. We'll wait for this to cool off. Reliance Industries is up 3.5%. You've got ITC, which has moved up 3%. Bharti Infratel 2% higher. M&M 2 bounces back. SBI at 323. Maruti Suzuki approaching 7,000 again. Yes Bank at 37.9. Bajaj Auto, Ultratech, everything is up. Coal India 2 now trades in the green. HCL Tech at 608 is up 0.5%. So many more gainers than losers. Breadth of the market seems to be better off. 71.25 now for the currency, so that is doing okay too. Some strength that we've been seeing almost on a daily basis that's coming in marginally, and we'll wait for, I think, the bond yields as well, because we've not really taken a check on that. As well, 6.44 thereabouts was what it was at yesterday, so just wait for that to open up.
Yeah, well, let's see if there are some result reactions that have come in. So National Aluminium Company should come up on your screen. The numbers were way below estimates and a loss posted. Likely the stock might be reacting. There's a brokerage note, I'm forgetting which one. The target is set at 34 or 35, so not the best of days for Nalco. Watch out for Phoenix Mills. That's the other interesting one that actually came out with good set of numbers. So that's the other one that you need to monitor. 2.5%, nearing 900 now. Let's wait and watch if this one has any reactions at all in the session. We will watch out for Chalet Hotels as well. The net profit was up about 2.3 times. Does it react positively is the question. Well, I don't know if there will be a 10% uptick, but certainly the pre-open rates show some excitement. Let's wait and watch if this lasts. Last but not the least, watch out for Camlin Fine. The stock was down about 10% yesterday as well. The manufacturing facility in China is awaiting clearance from the Chinese government to restart manufacturing. Maybe the street will not be too pleased with that piece of news, and the stock might start off lower. Let's wait and watch. We'll also watch out for the yields, because they've corrected quite a bit from 6.50 or thereabouts during just before the monetary policy. Yesterday we had about 6.42, currently at about 6.4480, so very flat start to the bond yields as well in the session. Let's wait and watch what happens during the course of the day. Yeah, I think I don't get bogged down by this move on Titan. I don't think we'll have such a sharp downtick on Titan as well, so you got to be mindful of that. Dharmesh, come in on some of these the auto components companies and the kind of results they came out with yesterday and the kind of flack they got. Bharat Forge, Motherson Sumi, and there is no excuse for what the stocks did yesterday. The numbers were bad. The point is, did you like what they said in the conference calls, and are you buying in the valuations here?
No, Dheeraj, I am not buying into the valuations here, because see, most of the auto component manufacturers have exposure to Europe and US, and the businesses out there are, the numbers itself is evidence of the fact that businesses are not doing well. So there's a downturn definitely happening for most of the auto manufacturers. Secondly, electric vehicle, when it kicks in, so there will be many auto manufacturer components which will not be required when EV rolls out. So but that transition has to happen. That entails a capex and all sort of expenditure on their balance sheet will be there. So that shift one has to look very carefully. So be it Motherson Sumi or a Bharat Forge, the top two names out there, we are not buying any of them. I have my own apprehensions about their future outlook, at least for next 6 months.
And in fact, Morgan Stanley and Nomura both have maintained their neutral rating on Bharat Forge. However, the target price put out by Morgan Stanley is 401. That's almost a 20% downside from these current levels. While Nomura has increased its target price from 458 to 475. It's already past that target price. So there is technically a downside even from these levels from Nomura. So expecting a recovery from the second half of FY21. That's what both the brokerage houses are factoring in for Bharat Forge. Anything else, Dharmesh, that is a conviction idea from your stable?
I think large cap names, maybe HDFC Bank or Reliance Industries, looks attractive on corrections. Reliance Industries has already entered a zone where one could start buying. So the fear about that GRMs will fall in the Q4 because of the lower offtake of crude and the crude prices falling off. So that is already being built in the numbers. I mean the stock price. So that remains a good buy. And Maruti. So these are the three large cap names which we are liking at the moment. Other than that, it's all public sector play, be it SBI, Bank of Baroda and PNB. So these are high conviction trading and investing ideas from our side.
Okay. Well, one stock which is reacting to a price hike that they've undertaken is ITC. The stock's likely to start off higher. The first 6 minutes of the pre-open session set the price at about 3%. Is there value in the stock? One would argue yes. If indeed you believe or your thesis suggests that the earnings are not likely to be volatile, you would presume that there is a lot of value here. The only point is, a lot of times in the past 12 to 24 to 36 months, ITCs turn out to be a value trap. I don't think it's created too much of wealth over the last 2 or 3 years for anybody who's bought into the stock at any point of time. So the question is only that this small price hike that this company is undertaken in order to offset the negatives of the budget, does it make one believe that you could buy into the stock because there might be earnings growth? That's the key question. Want to talk about it both fundamentally and technically. First, a technical view, since it's likely to start off about 2 to 3% higher. Kunal, would you trade ITC today?
So Neeraj, if I, last week also we discussed about ITC. There was a flag formation which was a bearish flag formation. Because of a massive fall, there was a small consolidation and it again retested the previous bottom. So I think, this consolidation may continue. So on the lower side, say levels to watch out for are say 205 to 207. On the higher side, say 220. If this zone is not taken out decisively, I would avoid the counter. If someone is willing to go long on the counter on a very short-term basis, then about 220, the target can be placed at 230, 235. But the structure is not really encouraging. So I would avoid really adding any position on this counter.
What about Bharti Airtel? I mean, to pull up the stock also, the kind of move that the stock has been seeing, even in the futures and options segment, the build-up has been pretty promising. 539 now for Bharti Airtel, making new highs. Brijesh, let's come to you on Bharti and whether there's a trade here.
See, they've in a daily charts, higher tops and higher top formation still is going on. After stock making a 552 as a 52-week high, mild profit booking has been seen. So till stock doesn't give closing below or doesn't break below 522, any dip should be used to go long. And I'm assuming like this pattern would be going on, and the resistance which I feel is somewhere around 580 to 585, where the nice amount of profit booking would be coming. So till 522 doesn't break, any dip should be used to go long in it for the target of 580 to 585.
Okay. Well, now both of these stocks fundamentally, as we said, and come to you first, Dharmesh, on ITC. Buy it because of the valuations or leave it alone?
See, the problem with ITC is if you look at the top line, so 44% comes from the cigarette division and the balance 56% from the other, be it paper industry, or agri, or FMCG, or hotel businesses. And now if you look at on the SOTP kind of a basis, the businesses separately, so FMCG business or hotel or paper division has not been earning the profits the way they should be, or the cash flow if you compare it with the peer-to-peer likes like FMCG. If you compare that with HUL, so the return ratios are pretty low. And when it comes to the PBT level, it is 83% is coming from the cigarette division itself, which is always a suspect given to regulatory environment and the type of taxes which are levied in that. So but that is the primary reason why ITC as a stock has not been performing well, though the ROEs are in the 22, 23 kind of return ratios are giving. And now HUL, if you look at the ROEs are way above 70, 80. So there is a clear disconnect between other businesses of ITC with a like-to-like comparison. And so it has been a value trap. You rightly pointed out, last 2 years it has not made money, and every time investors went in with a hope that things will turn around, but that's not happening. So there's some serious rethinking which needs to be done on the part of ITC management. I would leave it alone. If you want to play it out for dividend pay or 10-15% kind of upside, given the price at which it is trading now, the trade is on. But if one is hoping for a 50-60% kind of a price upside in next 2 years, I have my own doubts out there. So as an investor, I would leave it. But as a trade, definitely the trade is on for next 10-15% kind of a move on ITC.
All right, Dharmesh, we'll let you go on that note. Thank you so much for joining us this morning. We're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. Coal India, Siemens, Cochin Shipyard, BEML and BHEL will be reporting their numbers today.
Amongst earnings reported after market hours yesterday, Chalet Hotels and Phoenix Mills reported strong numbers.
On the other hand, Nalco and Bajaj Consumer Care reported weaker results.
ICICI Bank moves insolvency applications against Mercator to recover dues exceeding 50 crore rupees.
Capacity Infra Projects gets a contract worth 350 crore rupees from private sector client in Mumbai. I think that's Capside Infra.
And in key bulk deals, promoter of HSIL acquires 1.47% stake in the company. It's not a very liquid stock, keep in mind HSIL, but maybe, just maybe, the stock reacts positively, marginally at that, but keep in mind, liquidity is an issue with that one. Okay, let's get in an important market voice. U R Bhat, Managing Director of Dalton Capital Advisors, also with us on the show. Mr. Bhat, good having you. Thanks for joining in. We'll get into a detailed discussion in a moment for post-market open, but just wondering, looking at all the variables in the markets right now, are you working towards investing some fresh gunpowder to work? Because I remember earlier you had said that you were sitting on some dry cash as well. Are you putting that to work, or are you staying on the sidelines for the time being?
Well, I think staying on the sidelines is a good strategy, because the sort of uncertainties that are increasing day by day, especially with what is happening in China, I think, and the linkages that China has with global markets. I think it's worthwhile keeping the powder dry a bit.
You don't think there's a there'll be a recovery soon? Because obviously it also depends on the fact that whether this is a one-quarter phenomenon in China or it'll extend itself. But if it's just a one-quarter phenomenon, then China's expected to bounce back hard. And that will be obviously good for the other emerging markets as well.
Yeah, we will know when the production commences. I think lots of these factories, GM and all that, are expected to commence.
They've
production.
already started at the outskirts
GM,
of China.
I thought is 15th February.
Some of the smaller
ones have started. But I think the big ones, once production comes back to normal, I think that's when we really have to take a call. But till then, I think fingers crossed, and I think information coming from there is very volatile. So therefore, we have to keep watching.
Why be unnecessarily brave? Is that the point?
Yeah, I think so. That's the point.
Okay.
No point.
And just wondering, so in light of that, would you wait for particular valuations to happen, or would this largely be an event call that let the event get out, let we just have some clarity? The problem with that, Mr. Bhat, might be that prices might not be as favorable.
Yes, but the market has really not reacted to this, because the market is still just about 3% away from historic highs at very sort of expensive valuations, given the fact that the current result season also has not been extremely good. So I think the market is not really responding to the negative events. So therefore, I think it might be worth waiting and seeing whether it would, given the sort of news flow that could come.
Is it purely just coronavirus that we're watching for? Any other triggers domestically also that you feel could trigger the market mood?
Domestically, the budget is done and dusted. So now, and these quarter results have also almost come now. So therefore, I think now there's nothing really much to expect immediately, except probably the monsoon is the next event. But till then, I don't think there are any huge positives that can come in come domestically also. So I think it's wait and watch. And given the market is at expensive valuations, I think it's not worth being very brave.
Yes, it's a good idea to have some cash in the kitty. But about 30 seconds left to go, 10 seconds each. Brijesh, your top call for the morning.
I'll go with the GAIL. GAIL looks good in the chart, as I've said. For a target of 130, stop loss will be 116. Look for a buy side in it.
Kunal, your top call?
So, Devina, the first which we discussed was Maruti, and Maruti is opening near to resistance itself. So, keeping the stop accordingly for 15 minutes, I think I'll go short on the same, expecting 6,500. And the second is SBI. Looking at the way it's opening, I think 325, 326 can be a decisive resistance. Keeping the stop of 325, I'll think of going short.
Stay on, gentlemen. Here's how the markets are starting off. About 0.5% higher for the Nifty 50, more than 0.5% actually, 75 points in the green for the Nifty 50. So it's a good, strong start that we have, buoyed, no doubt, because of what the US markets did and what most of Asia is doing today. Sensex about 282 odd points in the green. Nifty Bank about 220 points, so 0.7% higher. It's a start which is strong and in the green. Let's see if this lasts. Bring up the mid cap and the small cap indices, and those two would have started in the green for sure. So bigger bounce really, because these had corrected a lot more in the session yesterday. The market weather was very negative. In today's session, at least the start seems to be the reverse. Bring up the heat map. I reckon a lot more green, very little red, only one stock in the red, and that is UPL, just about 0.4% lower. Aside of that, you don't have much else which is correcting, and then this stock was actually a good performer yesterday. What is doing well? ITC up about 3%, 2.83% to be precise. GAIL, result reaction, good set of numbers. It typically doesn't move too much. For now, it's moving about a couple of percentage points. The valuations are in your favor. The question is, can it last, or can it actually strengthen from here? Tata Motors, Tata Steel, Power Grid, Z Entertainment, after the clobbering that it received yesterday, is up about 1.3% as well. And Reliance, the big boy, they were now talking about how it managed to stay in the green. This one needs to perform well for us to have a sustainable day. For now, it's doing okay. And a clutch of banking names and auto names, by the way. Look at this line: M&M, Bajaj Auto, ICICI Bank, SBI, Maruti, all of them up about 1%. So it's a broad-based rally, which is what we need. About 0.8% for the Nifty Bank, going from strength to strength at the start. What about specific pockets? And the retail pocket was full of strength. There is also the Phoenix Mills result today. You could classify as retail or real estate, whichever way, but all of those stores were active. Avenue Supermarts take us a bit of a breather, but trend continues on its merry ways, and Phoenix Mills is now near at life highs at 908. 3.5%, a strong result reaction. Speaking of result reactions, one company that I want to mark is Nalco, and let's see if that has reacted negatively, just about marginally, 0.69%. Do watch out for this one during the course of the day. Devina, what are you spotting?
Start off first with some of the result reactions. Chalet Hotel, we already spoke about that one. We've got Bajaj Consumer to watch out for. Nalco, Phoenix Mills, Chalet's up about 4%. Bajaj Consumer is down 8%, disappointing the street. Nalco 2 down 1%. Results were below estimates. Revenues were down 23%. EBITDA was down almost 93%. And Phoenix Mills were slightly above expectations, the revenue up 16%. And that stock's up about 3.5%. Lakshmi Vilas Bank is up 10% today. Shilpa Medicare, remember there were no observations in yesterday's session. Also, the stock was up. Today, again, the stock is up about 9%. So there's a movement in that stock. In the last 7 days, actually, Shilpa Medicare is up 47%. So that's a big move that's coming on the stock. Sheela Foam is the other one. That's up about 7.8%. Rupa and Company is up 6.5%. Suvin Life is up about 5%. Then we got the likes of Deepak Fertilizers, Bajaj Electricals, Repco Home Finance, Walkhart continues to do well. The last 7 days has been up 10%. MTNL, Gujarat Pipavav, all of these names are up and active. Amongst the losers, you've got the likes of Divan Housing Finance down 4%, Rampur Chini is down 2.5%. Bharat Forge continues to lose some more. That's down 1.5%. And IOB reported its numbers yesterday. The stock's down about 1.5%. And Avenue Supermarts, the big one, 24.47. That's down 1.5% today. Obviously, some profit taking is warranted. Breadth of the market, positive 923 stocks advance, 284 stocks decline.
Brijesh, the big winner is GAIL, 3.3% higher. Any trades here?
Opening has been there in the GAIL, but as I have said, the trend look positive to me. Right now at 125.80, the stock has been trading. We can revise the stop loss from 116 to 120 or 122 around, and look for the present rate can be used to go long for the upside target of 132. And if we are giving closing about 132, then another say 5 to 7 rupees can be seen, but the time frame has to be increased. But 2 to 4 days trading, I am looking at this GAIL touching 132 around with the stop loss of 120. One can look out to buy in it.
126 and counting, good going here. Do watch out for this one. One quick thought, Kunal, from you on Eicher Motors. A bit of green after lots of days of red. How do you trade this one?
So again, extremely oversold counter, gap up open. So I think for timing, it's heading for 20,500 kind of zone. But yes, there is no encouraging positional call. It's a very short-term behavior, which I'm looking.
Leave it at that, gentlemen. Thanks much for taking the time out and being with us today. Appreciate your time. Back in conversation with Mr. U R Bhat. Mr. Bhat, the results from auto ancillaries are looking a lot more worrying than what the auto companies have done. Now, map for us what you think the next 6 to 9 to 12 months might shape out for autos and for auto anchors as well, because I think at least the Bharat Forges and the Motherson Sumis get impacted because of the global issues as well.
Yeah, I think the auto companies are on a bit of a fix now, but I think this is sort of a short-term phenomenon. I think come the second half of this the coming financial year, things should look much better because the BS6 would have been accepted by the market, and even the base would probably look based on the new base by that time. I think even the numbers would look quite good. I think there will certainly be a pickup in the economy in the next probably about the second half of the FY21, and that's when I think you will start seeing some good momentum to these stocks. But as far as auto ancillaries are concerned, the ones which are big exporters, I think will certainly continue to have some problems because internationally things are not looking as good. But I think domestically, the ones which are domestic focused, the auto companies, I think in the next 6 months things should look much better.
Mr. Bhatt, what are you making out of some of these so-called quality names raising money via QIPs at the aggressive prices, and post QIPs the prices are going up even further? I'm talking about the likes of a Bajaj Finance, life high for that one, 4,700 plus. An Avenue Supermarts did a QIP just under 2,000. Stocks at 24.50 now. I mean, it just keeps getting more expensive.
Well, I think quality names are in short supply, so therefore I think people tend to go for the quality names, especially when there is general uncertainty around. But I think from the promoter's viewpoint, this is the best of times for them to raise money if they are seen as quality.
But is there no element of apprehension in the market that if I'm paying 100 times for a particular stock, there is a possibility that this might backfire because of the valuations being so heady?
Well, I think it's certainly a very good argument, no doubt about it. But I think given the sort of polarization in the market and quality names getting very high valuations, and I think there's an element of competition there. Everybody wants to be in the same names, and so therefore I think it gets subscribed. But I think if history is any indication, people have come to grief for subscribing at the top of the market at 52-week highs, at all-time highs, and I think that is probably going to repeat.
Because for some of them, earnings momentum is stagnating. I wouldn't say it's making leaps and bounds of progress, even for Bajaj Finance for that matter. It's stagnating in a period of uncertainty. It's not falling, but it's stagnating. So to that extent, the only other way that you can probably see these valuations coming out is if the price starts to correct, which is also not happening.
Well, I think, as far as the valuation is concerned, I think, there is no argument. It is that, I'm not talking about this particular script, but generally the quality names are at probably peak valuations, even by historical standards. And so therefore, it is only earnings growth that can give some momentum. And earnings growth, at least, is not accelerating for sure. It might be decelerating, in fact. So therefore, I don't see any huge sort of valuation mismatch there. I think at the top of the valuation, and may not be a great idea to buy into these quality names at these prices.
Okay, so don't buy quality, sit on the cash. I'm guessing that value is value trap, which means that don't go out and even buy any of the companies that have come out with good numbers. I know you mentioned that results largely have been patchy, but there have been sporadic instances of some very strong performances, specialty chemicals, certain retail plays like Phoenix Mills today, for example, or the internet-based companies. I think we're still awaiting IRCTC, but a couple of others that have come out have been pretty interesting.
Yeah, I think there's always pockets of good performance here and there. But I think what one needs to see is whether there is a turnaround that is possible in specific sectors. Like I think in the auto there should be a turnaround in the next 6 months. So it's worth playing, and I think valuations may not be all that attractive given the current low level of earnings. But I think that the delta there could be very high. So I mean, it's such pockets where you see there's likely to be a turnaround that you should be sort of addressing.
Would you, by any chance, Mr. Bhatt, try and look at any of these companies which likely high dividend candidates, because we are coming to the year end, because of the changes there might be some declarations? Would you play for that, looking at past history of dividend and the yields that have been there for some of the names, particularly the PSUs?
Yeah, well, I think PSUs are dividend plays, but even though the dividend taxation has been shifted to individuals, that's about it. So therefore, I think, in fact, it's probably going to be worse for individuals because they'll pay the marginal
starting
rate,
the next year,
marginal rate. So therefore, I think dividend plays for this year, I think if generally the company itself is performing well, I think dividend plays are a good sort of subset to be concentrating on.
So you'll be comfortable looking at select PSUs? We are not talking about names here, but there are a bunch of them which are likely to give good dividends.
PSUs which are not aggressively valued and good dividend plays, I think maybe worthwhile taking a bet.
Okay. Do you feel that there is a revival in cyclical sectors that we could expect for 2021? We've seen metals playing out the first half. I mean, in the second half of calendar year 19 wasn't bad. You did start seeing a pickup and a turnaround. Stocks have started moving up. Other than that, do you feel that there's much to be watched out for from cements, metals, any of these?
Early times yet, but the global plays, I think China is going to be a very important factor. How this plays out is going to be closely watched, because China accounts for quite a lot of these commodities. But domestic plays, given the fact that the government is spending much more now on infrastructure modernization, may be worth keeping a close watch, but I don't think quite a few of these companies are attractively valued. They're quite expensive. But I think if you're really penciling in a turnaround, a dramatic turnaround in the next 6 months in the economy, may be worth keeping a close watch.
Okay, we're about 1% higher as we wrap up this conversation with Mr. U R Bhat. Take a moment to thank you, Mr. Bhat, for joining in today.
Thank you very much.
Really appreciate your time.
Thanks.
Well, the start is strong. The question is, can it continue? We will get to know during the course of the day. Take a break, though. Coming up, we try and get a sense of the extent of the recovery in rural India from Ramesh Iyer from Mahindra & Mahindra Financial Services. Stay tuned.